So Goldman Sachs did a list for 2022 of stocks that they think will rise on average 45%. Only one of their stocks made my approved filtered list. I go through 10,000 stocks and then filter until I get to the top 1% of stocks. Let's look at their list and I'll tell you which one of mine is in there. So this was their 40 stocks to make now with an average upside potential of 45% in 2022. Walmart didn't make it onto my list, whilst they think, and you can see the number down there, it's got a 44% upside. It's up to you if you want to copy them or copy me. That didn't make it. I'll tell you which one of them did make mine. So Walmart, sorry, didn't make the list. Neither did Foot Locker. And you could make all sorts of thesis as to why you think, as with Goldman, it might go up 76%. Let me run through some more of the numbers. You might want to pause this. Eastman Chemical Company, they think 47%. Didn't quite make my approved filtered list. This wasn't on my approved filtered list either. Neither was Alaska Air. And they do keep going on about Alaska Air. In fact, they've been banging on about them despite the decline that it consistently keeps having. You might want to speculate and gamble on that particular one and the turnaround and the fact that Goldman's think it's going to do well in 2022. It's not one that makes my list. And the reason for that is my filtration processes are a lot more stringent than theirs. So I look at not just valuation, not just revenue growth, not just cash flow or cash return on capital invested, not just the Sortino, i.e. relatively low volatility, good returns. By the way, I was up 54% in the 12 months to November. So I tend to do better than their picks anyway. DraftKings up 108% is their projection. Didn't make my approved list. Zimmer, I quite like Zimmer. My private equity fund sold a company called Neat Creations to Zimmer. Zimmer is a $1 billion US company. I'm a fan of them, but not on the share price, I'm afraid. Doesn't make my approved list. And you can see some of the declines. And you might say, well, given those declines, surely it's going to go up. Nope, not for me. Neither does Penn National Gaming. So which one out of all of their lists made mine? I'll come to it in a second. Darling Ingredients. What a lovely name for a company. Doesn't make my list. 61% they think. And you can see the numbers they think at the bottom down here and what their targets are. On target for them, not on target for me. I approved list earlier in the year, but then as things change, things can fall out. Boeing, nope. Agco, nope. Okay, Bunge or Bungie, can't have that one. This one did make my list. Dick's Sporting Goods, and it's actually been for the best part of the year on my approved list as well. You can see there's been some good periods. So it's had a good 2021. I think it's going to continue having a good 2022. They think 58% up. I'm not setting a target on it. I don't tend to send targets. What I do is I hold for 12 months. If it drops 25% from the peak it's been since I bought it, I would exit. And after 12 months, we go through the whole process again. Everything's on probation. We start with the 10,000 stocks. If you want to learn more about my approach, go to campaignforamillion.com, campaignforamillion.com, or download a free copy of my book, investing-champions.com, investing-champions.com. I'll run through the others. General Electric didn't make it for me. Neither did Deere, 37% they think. Neither did FedEx. And if you want more presentations like this, then follow me on, well, LinkedIn and investing-champions.com and the rest of it. Jack in the Box, 42% didn't make my list. XPO Logistics, and so on. Kratos, Uber, 52%, was previously last year on my list, and it gave us a 60-odd% return. But then we get out. Why? Because we got out before 2021, because once it's delivered the returns and 12 months are up, or it drops 25% from the highest it's been, then it's time to get out. We don't just sit there and see all our gains whittle away again by the markets. So there you go. Others, Merck, Raytheon, and so on, Caterpillar, Alta. Like I said, you might want to pause this. FMC, Petco, Embraer, Johnson Controls, PPG, Element Solutions. Hopefully you found this useful. And like I said, I'll deliver more of these during the course of the year. So do continue following. Have a look at investing-champions.com to download a copy of my book. There's still more. Spirit Aerosystems didn't make my list. And one of the key reasons they don't make my list is if their cash return on capital invested isn't in the top 10% of all companies. In other words, by cash flow, their ability to generate cash flow isn't there. If the revenue growth isn't there, if the profitability of the company and the profitability growth relative to their share price isn't there. So why is my filtering process tighter than Goldman's? Well, because I've only got one client myself, and my SIP and my ISA, my pensions to save for. They've got to cater to thousands of clients, hundreds of thousands of clients, and so they're going to pick a bigger number of companies. Have a look at my campaignfor1million.com for more free educational tools. And I hope you found this very, very helpful as well. More of this to come in the new year. If you go to campaignfor1million.com, you'll also see my Telegram channel where I post these things first as well. Thank you.